Hello and welcome to Zoo's Investor Webinar, which is titled The Next Chapter of Streaming. I'm Stuart Green and I'm the CEO. For those who follow the story, you will know that Zoo is rooted in the media and entertainment industry. And for those who don't, I'll just take a moment to explain what it is that we do. We're a technology-enabled service provider, and we work for large streaming companies and content producers, entertainment content producers, and we provide services to them so that they can take the TV programs and the feature films that they make and distribute them globally on different streaming services. So the services that we offer fall into two broad areas. One is localization, to adapt that content through subtitles and through dub soundtracks. And the other area we call media services, and it's to do with some technical things that you need to do to make sure that a piece of content will play smoothly, properly, without glitches, properly synchronized when it goes out onto potentially one of many different streaming services. So we're in an industry that has undergone some major changes over the last 3 years, and you only need to look at the financial performance of Zoo over that period to appreciate how significant those changes have been. Those changes have brought about, have had an impact on the entire supply chain, which includes Zoo and all of its peers. But after this disruption for 3 years, we're now finally seeing some stabilization in the market. We're seeing trading begin to normalize, and we feel that this is a good time to reintroduce the Zoo story to the market and provide an update. So we have a teach-in that you're watching, and in it we're going to cover two main areas. One, to provide an update on the changes that have happened in the industry, and in particular the changes that have taken place within our customers. And then secondly, to talk about the impact that has had on Zoo, how our competitive position has changed, indeed enhanced as a result, and some of the financial implications that you might take from that. A key takeaway that we hope you leave this webinar with is that the market's moving, but it's moving towards Zoo, and we are increasingly in a strong position to capitalise on the opportunities that lie ahead. So the way we're going to cover this is that I'm going to begin and provide an overview of the evolution of the industry, and then three of my colleagues who are going to join me, internet permitting, here they are. So first up will be Gordon Doran, who's our Chief Commercial Officer. He's going to focus on the commercial perspective around all of this, the changes that we're seeing in the requirements of our customers. And his segment is called The Need for Speed, because that is a common thread that we're seeing right across our customers, the need to do things more quickly. So he's going to be touching on the new propositions that we've introduced over the course of the last year or two, particularly Fast Track. And then following him will be Eva Zawadzka, who's our VP Operations for EMEA. So hopefully Eva will be able to bring that to life by giving you some kind of real world examples of the kind of projects that we're running that in our Fast Track offering. And then following Eva, Rob Purcell, who's our CFO, is going to pick up, and he's going to provide a picture for the financial implications of some of those things we've discussed. So following these presentations then, if you are watching live, we'll run straight into a Q&A. Myself and Rob will stick around, and we'll be very happy to answer any questions that you would like us to address. And you can submit them at any point. You don't need to wait until the end. If you're watching live, to the right side of your screen, I think you should see a tab with a questions section. Feel free at any point to submit your questions there. And as I say, when we get to the end, we'll use whatever time we've got available to get through as many of those as we can. So let me begin then with an update to the evolution of the industry. As I said, it's a disruption that's lasted 3 years. Before I explain that, the reason for that disruption, let me first of all just give a bit of context for what's happening, particularly in the consumer markets. So if you're in any doubt, be assured that we are very much in the streaming age. So there's more content that's consumed through streaming than through any other method, from network television, optical media, anything. Streaming is obviously widespread right across the globe, so there are streaming services that operate in practically every market. Although some markets now, from a subscriber standpoint, relatively mature, particularly US and UK. The number of subscribers to over-the-top services is still growing globally, and indeed it's forecast to continue to grow at least until 2030. So bear in mind, obviously, this is a line of services, streaming services, that were introduced firstly in 2007. And back in those days, the kind of content that you would watch on a streaming service was really primarily, indeed exclusively, films and episodic TV type programming. But now streaming is becoming the new television, but with a difference. So it's the new television because what we're seeing now is all genres available on streaming services, just like TV. The difference, though, is that these services are global. So what you've got in these streaming platforms is a global broadcast proposition. So if you compare that with local broadcasters that have been traditionally have dominated the industry, so think BBC, ITV and so on in this country, there are very different dynamics at play if you're delivering to a global audience. For one thing, you can amortize the cost of making programming across a bigger audience because clearly you've got folks who live in different countries. But what that means, of course, is that when thinking about the content that you make, these organisations are designing that content to have appeal on an international basis, and that obviously requires that content then to be localised for those audiences. A leading market commentator in our arena is a company called Ampere Analysis. They do produce lots of interesting research. They recently identified that in 2025, the spend on producing entertainment content that was the first year in which more of it was spent by streaming companies than it was by any other category of company. And that gap between spent by streamers and by other groups is widening further this year and beyond. If you look at the global spend in 2026 as forecast on entertainment content, it's about $255 billion. So as well as the structural shift that we're seeing in the companies that are spending that money, towards more by those global streaming companies, there's also some significant shifts that have taken place around where that content is being sourced. So in particular, more and more it is coming from international locations. So in the days of traditional network television years ago, it would be pretty unusual to see a Korean drama or indeed content from many different international locations. But now Korean dramas in particular are obviously a huge hit on these different streaming services. What may interest you to know is that after the US and UK, the third largest exporter by volume of entertainment content at the moment is Turkey. And in the case of Turkey and Korea, what you have there are countries that have a long tradition of producing great quality content, where historically that content was really consumed locally. Now, through streaming, it's reaching global audiences. So, back to my original premise, which was that there has been a disruption. So why is that? And it really comes down to the fact that in streaming, companies are operating quite different business models. They're monetizing that content in different ways that have a strategic impact on the way in which they conduct their business and the way in which they produce that content. So in particular, we've seen a huge decline in advertising and licensing revenues that come through traditional network television that has had a big detrimental impact on traditional media organizations. What they're doing increasingly, of course, now is making content that is better suited for global audiences, where in the past it's been a much more of a local focus. And importantly, they now view content production as something that, content is something that forms part of a portfolio that is offered through a consumer streaming service. So that's to say that content is seen less and less as a sort of isolated pieces of programming that sort of stack up in their own right. They now have to be viewed as part of a broader offer, a subscription service, to make sure that offer in that service includes content across a wide variety of genres that will have a wide appeal in the market, not only to different demographics, but also to different geographies. So content is more thinking about commissioning content. That's much more of a portfolio proposition now than a sort of standalone type proposition as it was historically. So this obviously has a big impact on content production strategies, and it also has a big impact on the talent who are used to produce that content. So hence the reason for the strikes that took place in Hollywood a few years ago, where writers and actors were on strike for a prolonged period, because the business models on which that we use as the basis of their remuneration are kind of shifting, and so in effect, in the streaming world, they were compensated to a lower level than they had been in when this content was really monetized primarily through network television. So hence there was a need in the industry to address that, and there was some disruption, but there are now new agreements put in place to make sure that that's remedied. So major studios, our customers, particularly those traditional organizations, had a big shift in focus from 2023. That led to some significant downsizing. There was lots of M&A. You've seen some of the big changes that have taken place. There are others that are still in progress now. But the outcome from all of that is that 3 years on, most traditional studios are profitable, which is obviously great news. Through this period, we have seen lower levels of output of original programming from those traditional studios as a transitory thing. And that's because the kind of content they're producing, as I mentioned a moment ago, they've shifted their focus. And obviously, if you change your strategy around what programs you make, it takes a little while for that to work its way through to programming that actually reaches a streaming service. But also it's important to note that making original programming is costly and it's high risk. And so one of the effects of that we've seen has been that there has been a much greater level of licensing of content. So that's both our customers licensing out their programming to others, as well as licensing third-party content to put on their streaming services. And obviously that's a lower risk undertaking for them. As I say, we think these shifts are transitory, and as this year we start to see the industry normalise, we think that we'll see a kind of return to some of the patterns we saw previously, albeit with off the back of sort of different approaches in terms of the kind of content that's made by our customers. Studios have transformed themselves to be more efficient in this new world order of streaming, and that there are a number of aspects to that. One of which is that they've been striving to reduce the time to market. So if you think about what happens and where we fit within the value chain, when a program has been completed, there's a piece of work that needs to be done by companies like us to localize it, to package it so that it can be played out on one or more different streaming services. So the work that we do essentially becomes a bottleneck to getting content to consumers, and consumers and customers want that to happen faster. So just by way of example, a typical SLA for high quality dubbing in our industry is 30 days. So a dubbing vendor would receive original materials coming from their studio client, and 30 days later they would deliver the dub soundtracks back to the customer. And that's too long. In this new world, that's just too long. Another key development that we've seen is that as streaming becomes this new television, then the kind of content types that previously you would have seen on local TV channels are now coming to streaming platforms as well. So the most obvious of those is sports. So now increasingly big streaming services are buying up rights to show sports on their platform, but also other time-sensitive content is coming onto streaming as well, where programming is shown live or very near live, very soon after it has been recorded. The fact that there are global audiences for this content means then, of course, that the localization of that quick turnaround content has got to be much faster than it ever was before. One example of one category of content that we're seeing huge growth is in podcasts. So obviously podcasts were originally a phenomenon on YouTube. They're now available through all sorts of different channels. They started out as being audio only. Now 71% of podcasts that are produced are video based. It's a huge growth area. Audiences are growing by 40% year on year, and its growth is being driven by Gen Z and millennials. So it's a really important demographic that, of course, our customers are very keen to capture. A lot of this content is, in some cases, it is streamed live. In other cases, it is streamed very quickly after it is made. So again, time to market is key for this very time-sensitive content, and we're seeing more streaming services offering podcasts on their platforms. Microdramas is another important development in the market. It's the fastest growing format in entertainment. If you've not come across it, I urge you to read around a little bit. It started out as a kind of a niche type of content coming out of China on platforms like TikTok. It's grown very quickly to be an $11 billion global industry. So microdramas are just that, they are dramas, but they are mobile first formats. So they're designed to be consumed on your mobile phone. They're usually vertically orientated for mobile consumption. Episodes are typically 1 to 3 minutes long. And these formats are now being adopted by major Hollywood studios. So they're using their own brands to start to produce lots of new content that's going to be consumed in these ways. So again, requiring a very fast turnaround. So what do all these changes mean for Zoo? Well, first of all, through this period of transition, we have seen what we believe is a temporary subdued demand through lower levels of output of original programming from our major customers. That we believe will start to change this year. We've also seen our customers, a greater proportion of the work we do for them is in relation to licensed content. Now, when content is licensed from a third party, there is inevitably less dubbing that's required for that content because typically if you're licensing something, you won't invest in dubbing for distribution. Now, traditionally in our industry, of the spend on media localization, 70% of that spend is distributed dubbing. So that shift from lesser volume of original programming to licensed content has had a disproportionate impact on the levels of demand of dubbing in our industry. And this has been prolonged, this has been ongoing for 3 years now, but we are seeing some significant greater levels of activity from our customers now who seem to have come through this process. That's partly evidenced by the number of requests for proposals, RFPs, that we've received in recent months. We mentioned that in some recent trading updates. So we do believe that the industry is coming out the other side of this, and in 2026 we'll start to see some normalization of demand. So through this period, our customers' needs have evolved. So because they have fewer people to manage relationships with their vendors, for example, they're looking for simplified vendor engagement. So they want fewer vendors, but each of those vendors has to have an end-to-end capability. That means to be able to do all the localization, all of the media services. They're looking, as I mentioned, for faster turnaround. They're looking for partners, vendor partners, who are aware of AI, because clearly they see AI as the future. There's no putting the genie back in that bottle. It's affecting so many areas. Entertainment is certainly one of them. They want to be sure, our customers want to be sure that they're partnering with vendors like Zoo who will not only embrace AI and use it where it actually makes sense and adds value, but also that they will themselves see benefits of that adoption. So that, I think, is a great segue to our next speaker. So Gordon is up next. He's going to expand on that changing commercial landscape that I've touched on there, and in particular, he's going to talk and explain how Zoo's proposition plays exactly to those changes. Gordon.
Thank you, Stuart. My job today is to what's the need for speed? Why do people need it? Why is our customers asking for it? And what are we doing about it? So we start by looking at traditional turnaround times that has been in the industry for a long time. Typically 10 days, 14 days, couple of weeks to make subtitles. Dubs, 4 to 6 weeks, something around that is a sort of normal timeline. But things are evolving for our customers, and therefore they need things to be done a little bit differently. And the reason that they're evolving is that they are looking at different types of content rather than that traditional episodic content or feature film where those timelines would work well. Today, their content needs are very much evolving towards a lot of short-form content. Now, short-form content could be these microdramas that I'm sure a lot of people have seen, podcasts, things like that, clips, things that are also quite topical where, they can't wait for 4 to 6 weeks to get a localized version out through the door. They have to look at something much, much quicker. So that's an area that we've identified as really important for our customers, and therefore it's obviously something that's then really important for us. So for the past couple of years, we've been evolving how we work to allow us just to go much, much faster. And when I say much, much faster, it's going from, for a dub, from 4 to 6 weeks down to 24 hours in some instances we've been able to do it. For subtitling, again, from 10 to 14 days down to 4 hours and less is kind of what we're looking at. So to be able to do that you have to have a few things in place and be really focused on certain areas. First part of that for us is a true follow the sun mindset, where we have our ability to work 24 hours a day on any type of content that comes through. So I talk about subs and dubs because they're two of the city main areas from a localization point of view. But for us, that also includes metadata, artwork, media servicing, i.e. the processing the video, encoding the video, packaging all those things up together, and then delivering them on the various platforms. So for us, that end-to-end model that we spoke about in the past, really utilizing that, but with a follow the sun mindset where we can operate 24 hours a day, 7 days a week, 365 a year. That's really, really important to our customers because we have to be available and able to work in their product whenever it comes through the door. So the past few years, we've really looked at how our business is set up, how we're structured, where our production teams are, and how we're able to utilize them effectively, like I say, 24/7. So that's one leg of it, making sure that you're able to operate as a business, constantly. The other side of that is technology, is how can you apply technology sensibly to make sure that you can hit these goals for our customers for the turnaround time on the various products, but then also how do you maintain that quality level that everybody expects. And so, technology is one of the first parts that we look at. How can we deploy that catch-all name AI, but how can we deploy that technology sensibly, not just for the sake of deploying it, but where it actually makes a real impact for us. And so we've focused a lot of our energy on that. Previously we were working on days and weeks in terms of how we do something. Today it comes down to minutes and hours. And in that, anywhere we can shave off 20 minutes here, 15 minutes there, 30 minutes there, has a big impact in the turnaround cycles that we're looking at. So really dissecting what we do at a very low level, understanding the technology that's available to us across the board. Everybody just thinks about maybe, machine translations or LLMs being used for language. There's actually a lot of other areas that we can deploy that technology, which has an immediate impact in the speed that we can go at, but then also allows us to make sure we maintain that quality with humans in the loop, wherever they should be part of the process as well. So actually a combination of those things go hand in hand, deployment of the technology, but then making sure we have humans in the loop, whatever it makes sense from it, to ensure that it's a high quality output that we give to our customers. So like I say, by a combination of those things running 24/7, deploying the technology, human in the loop, we've been able to really shrink those windows down, which is something we found has really resonated with our customers way beyond just that short form or live content. Obviously live, you have to do it with live because it's live. So very, very short cell life. People expect to be able to see that in their native languages as quickly as they can. Drives engagement for our customers, which is really important. But also we're finding that just traditional work as well that had those 4 to 6 week turnaround times. Suddenly, if we can produce that in, 7 days for a dubs or obviously much less for subtitling within hours, that actually has inherent value as well, where they can get their product on the market much more quickly, get people engaging with it much more quickly, engaging with the platform, especially when they're 7-up. A lot of these are ad tiers as well now, so high engagement across all these genres is really important. And as we said before, they're competing with people's eyeballs, with TikTok, various other platforms like that they're in competition with to get people's attention and to make sure they're on their platform. So we've, like I say, we've really doubled down on that, and we've seen that as a great growth area for the business in the past couple of years. I mean, it went from very little revenue to, grown pretty nicely at the moment. So it's an area that, like I say, we've really focused our energy on, because I think it's an area where we can really differentiate ourselves. We have this technology first approach to what we do. We have the platforms that we've built over a very long period of time, which we're really able to utilize now as we deploy new pieces of technology. Can't deploy technology unless you've got a platform to deploy them on. So we're able to do that really, really efficiently and quickly, and adapt very quickly to our customers' needs. So that's the real need for speed, is it's driven by our customers and us working really closely with our customers. What we'd like to show you now is where the rubber meets the road. What does that actually look like in practice? And I'm going to hand over to my colleague Eva, who heads up our production teams in Europe, and she'll give you an explanation as, okay, in practice, how do we do that? How do we take a dub from 4 to 6 weeks to complete, down to 24 hours to be able to do a dub, high quality dub, for our customers. So I'll hand over to Eva, and she can take you through all of that. Thanks.
Thank you, Gordon. I will now walk you through one of our recent projects, a case study I want to present to show you how the projects, how it works in practice, how they're executed. The project I want to present to you was for one of our major clients, and it was for their live programming. The client requested a German voiceover dub within 24 hours from us receiving the video and audio materials, and pretty much from when the program finished. Just for comparison, a standard dub takes around 3 to 4 weeks. We worked very closely with the client. This helps us with the preparation work. So there are a few components that are very crucial for live programming and for those super accelerated dubbing projects and subtitling projects. We need to work very closely with the client to know the exact start time, to know as much about the programming as possible. We obviously want to receive the script if it is live programming. So we were working closely to understand what will be happening in the show, what the cast is, getting their descriptions so that we can prepare ahead of time. And that takes me to the first stage, so the preparation work of the project. This is a very important stage. We start ideally a couple of weeks ahead of time. Again, this is different to standard programming, where we would start from receipt of the assets and from receiving materials from the client. Here we start ahead of time. We cast, we set not only the creative team, our internal teams, linguistic teams ahead of time. Everything is planned according to the start time of the project. So to take this project as an example, it was airing in the US during their daytime. We received the video and audio materials at 4:30 p.m. So during our planning stage, knowing when we will most likely receive the materials, we planned the initial stage to be prepared and executed by our colleagues in our US office. From there, they were handing over and everything was pre-planned to our other offices so that it happens during their daytime. This is the only way we can really sustain these type of projects, to work around the clock, and to hand over and follow the sun, as we call it. So if you'll see on screen now, I'll present you different systems of ours as well so that you can see how we pass that on not only from colleague to colleague and from office to office, but also from system to system so that it's secure and it doesn't leave our ecosystem. So in this case, we received materials at 4:30. Our colleagues downloaded them and uploaded into ZooMedia, which is our system where we hold all our materials. And from there, it links to all other systems. It's all interconnected and it's secure. Once it was uploaded, we would link it to ZooScripts, where we would utilize AI. AI automation, our systems are crucial for those projects. So working closely with the client, we would use ZooFlex. You'll see this on screen now as well. We would use ZooFlex to automatically create the script. For live programming, we would not receive a script. There is no script because it's unscripted content. So ZooFlex would time it for us and also script. So we would receive that automatically. Now, one of our editors will be going through the script to make sure no mistakes or no mishearings were introduced in the process. So we always combine AI or automation with humans to make sure we don't introduce any mistakes. Once the editor has gone through the text, you will see from ZooScripts, we move that again into ZooFlex, where we select one of our translation models. This would be the first pass of translation. Again, you will see now on the drop down, if you look on screen, on the drop down, we would be picking the right model. So we have a model agnostic approach. We don't have one translation tool. We select the tool that is best for the content type, for the language, and for the project that we're working on. So here we selected the right translation model that we thought was for this content, and the first pass of translation was created. From here on, so at the minute I'm walking you through the systems, and obviously it will move on to the different offices. From here, we contacted one of our translators that the translation is ready and the line tab resources went in to again make sure no mistakes were introduced in the process of automatically translating. They were adapting the script while our studio was already analyzing the script, preparing it, and the director was ready to start recording. So depending on the project, in this case, we had the time to complete the translation and moved on to recording. However, we can do that in parallel as well. Our system allows that just in case we had any delay or needed to for any time purposes. Once the translation and adaptation was complete, we moved on to our recording stage. Here again, if you look, you can now see in ZooDepth. And in ZooDepth, again, you can record in parallel. You can have several people recording the project. And just going back as well, when we do the translation, we would make the translation both for dubbing and subtitling, and the editors would go and edit that text for the purpose of either subtitles or dubbing, which has to be slightly different. Once we got to the recording stage, we were recording in parallel. Again, a lot of the process has to happen in parallel. We have to cut time wherever we can in such fast turnaround time projects. So here you can see it's for the purpose of the presentation, so it's not the actual project, as we cannot share that content, but you can see we're recording in parallel. As soon as the recordings are complete, we would download and edit. If we needed for time here, we had to edit as well as we were recording. We would edit the dialogues, make sure everything is correct, and move on. So our studio would, at that point, finish. It would be their end of the day. So in this case, they finished late their evening, and it went into our centralized mixing facility. again, utilizing the 24-hour approach, so making sure we mix during the daytime of that particular office. The QC, once we've mixed, there is a QC stage as well to make sure the audio is correct and there are no mistakes, nothing happened, we don't need to fix anything, and deliver to the client. So as you've seen on the systems, nothing leaves our systems so it's secure, but it also allows us to introduce automation where it makes sense, but also have a human in the loop to make sure it's corrected, QC'd. All of those processes, in the case of this project, once we completed during the daytime in Germany, in our studio in Germany, the other offices took over, and the process was completed in the US, where it was their daytime and also where we were delivering to the client, again, during US daytime. Depending on when the project starts and what the client desires, we might use more automation or less. So all those projects are very agile and flexible. So we wouldn't just use one size for all projects. It really depends, and it's working very closely with the client and seeing what really they would want. We wouldn't use only one or the other. What is most important is just to recognize that all of those stages need to really happen around the globe. It needs to be the follow the sun model, and as I mentioned, we need to work very closely across, otherwise it's not possible to deliver or sustain. It is possible to deliver, but it would not be sustainable to do that at scale if we couldn't utilize different time zones. Now, depending as well on the budget of the client, so it's all very flexible. Budget, automation, workflows, what's the start, what's the duration of the project, whether they need subtitles, whether the subtitles need to match the programming or not. Everything is worked very closely with the client. Our studios as well, because a part of the dubbing, we need to deliver a lot of other components. We need to deliver the dub cards, which lists all the cast. We need to deliver forced narratives for anything that wasn't dubbed, that was an image. So all of those processes happen as well in different offices, depending on the start time of the project. And now, as I was touching on the budget as well of the project, I wanted to hand over to our CFO, Rob, who can expand a bit more on budgets, on how those projects work financially, and is the best placed to give more insight into those projects when it comes to their financial side. Thank you. Over to you, Rob.
Thanks, Heather. Okay, so what I'd like to do is go through some of the financial implications of the shift towards these faster turnaround projects, and in particular focus on the margin, as well as the potential revenue opportunity that we can see. Now, before I get too much into that, I'd just like to make some wider points about the financial model that sits behind Fast Track. So firstly, do shorter timelines mean less work, poorer quality, lower volume? And as a result, does that mean a potential reduction in revenue or a reduction in margin? And the reality is the exact opposite. So the volume of work, the quality of the work that we do within these fast turnaround projects is exactly the same as any other project. We're just able to do it on a dramatically compressed timeline. And we do that, as Eva said, by performing many different tasks in parallel. Now, being able to process projects more quickly makes us way more competitive, which helps protect and even maybe enhance our margins. And certainly for this highly accelerated turnaround, like the 24-hour dub that Eva described, that is a premium service, Fast Track. And we believe the current no competitor is currently able to match that. Now, we can do it because of Zoo's proprietary technology, which has been developed over the years, about the last 10, 15 years, really specifically for this industry and in partnership with our customers. And more recently, we've also integrated AI to automate certain tasks, remove bottlenecks, and free up capacity for the more creative and expressive parts of the project, which is often where you get the value out and we get that enhanced quality. Now, that gives us an inbuilt advantage to deliver faster turnaround times, but it also gives us a structural advantage over our competitors who are still using the traditional model of multiple different studios spread over many different regions. What we do is offer a solution based on our proprietary cloud software platform, remote operations, and distributed workflows. Now, as I said, we've done this in partnership with our customers, we're getting feedback from them, and the feedback we've received is very clear. No other vendor can deliver the quality that we're doing at the speeds that we are. And when the customers need results in hours, not days, then we can price that as a higher value premium service that delivers us an improved margin. And that's an improved margin in terms of quanta and in terms of percent. So that increase in price, it does reflect some real incremental costs to us. So when we're doing fast-track projects, we may have to pay freelancers premium rates for their work. And maybe that's because we're asking them to work long periods of time, to normal business hours, to very tight deadlines. But it's not just about paying freelancers more and trying to get them to work harder, as well as having more additional work in parallel. Over the last few years, we've expanded the company through making some acquisitions. So we now have operations in places like UAE, Korea, and India, as well as our teams in the UK and the US. Now, they're all using the same network equipment, they're on the same workflow systems, and we've trained and cross-skilled them to work in exactly the same way as each other. And that means it's very easy for us and seamless to pass projects from one of those teams to the other. And it allows us to work, as we say, we call it our follow the sun strategy, so the work literally follows the sun. So we're not reliant on teams working unhealthy hours or having to pay large amounts of overtime. We can just move the project as the days move and the hours move on. And that means that once we receive a project, we can work on it continuously until that project is completed. Now, I was particularly impressed when I joined, and a few months later, I was seeing one of these projects. I was seeing what it could do. And it was a piece of content that was 5 hours long. But we were able to turn around subtitles in a large number of languages within 3 hours. So it would take 5 hours to watch from end to end, but 3 hours for us to create these subtitles. And we did that by, at one point, having over 400 freelancers and zero employees, all connected to the system, working in parallel. And I'm sure you can imagine how hard that is to pull together, to make sure it's of the right quality, to make sure it all stitches together seamlessly. And that's only possible to do by using our own developed internally workflow tools and some very smart media tools as well. So the net effect of this is a high margin service, and we expect that to feed through in terms of our business and what you see in our numbers as Fast Track becomes a greater share of the mix over the time. And it's also worth pointing out, I mean, this is something we've been developing over the last year or two, and you may notice in the numbers that there hasn't been a significant increase in capital expenditure. So we haven't had to invest in new infrastructure or do a large amount of development beyond what we'd be normally doing. Now that doesn't mean it was easy to do. It doesn't mean it's easy for competitors to copy. What it really shows is us building on the strengths and leveraging the model and the existing platform that, as I said, has been built over the last 10 to 15 years. So from a margin perspective, fast-tracked, fast turnaround projects at worst will protect our margins, but we, as I say, we'd expect to see some incremental margin percentage coming through. So it is good value business, but then the question is, well, what's the revenue opportunity that sits behind it? And whilst it is still early days, particularly for our customers, and then getting used to the types of content that would require this fast turnaround solution, but already it is today contributing 10% of our revenues from several clients. And as my colleagues have said, this is clearly where the industry is headed. And we already have a proven solution in place. So we are way beyond the research and the testing. This is work that we are doing every week. We are getting better at it. We're learning more and more about it. So whilst there is a premium service set, I think that the revenue opportunity could go way beyond this. Now, when we've been talking about Fast Track, if you remember, we've been talking about reducing subtitle lead times from 3 weeks down to 3 hours and dubbing from 4 weeks, 5 weeks down to 24 hours. So it's very fast. It's a big change, and it comes at an incremental cost to us and to our customers. But what we're seeing now is the opportunity to potentially disrupt the dubbing industry by offering accelerated timelines without really changing our cost base, and therefore being able to charge our customers a very similar amount. So by taking what we've learned from doing the really fast turnaround Fast Track service, as Gordon said, we believe that we could offer 7-day dubbing. So not 3 to 4 week dubbing, 5-week dubbing, 7-day dubbing, without compromising quality or having to increase prices. And being able to show that already to our customers is deepening our relationship with them. It's allowing us to have more conversation. And we believe that there's a significant opportunity there to grow our share of their business and to catch more of their spend. So it enhances margins, it protects our margins, it's a new revenue stream, so we see that as potentially being able to increase our revenues, but also by taking what we've learned and changing that to be able to give just faster times for the same price to our customers, we see that there's a really exciting opportunity there to be able to grow revenue as well. And so we think that this will become a very important driver of our future growth, particularly streaming platforms as studios diversify their content and prioritize speed to market. And it's a great example of how Zoo's technology-led model allows us to innovate ahead of the market. And that does allow us to protect margins, tailor solutions, look for new revenue opportunities. So it's a very exciting time. The team done a great job in getting us here today, and we've already made a huge amount of progress. And I look forward to being able to talk to you a little bit more about it in the future. And with that, I'll hand back to Stuart.
Thank you, Rob. So hopefully you now have a good picture of how the market has changed and also how Zoo's competitive position is strengthened given the new customer requirements. Our tech-enabled approach means that we're really well placed to address the new requirements that have developed in our industry. We have Fast Track as a differentiator, but we can also turn around standard services so much faster than others. And that's not because we're doing less work, it's because we're working smarter, we're leveraging our tech, and we're doing much more in parallel through the capabilities within our systems. So before we wrap up this section and move to Q&A, I just want to thank our speakers, Gordon, Eva, Rob, and I want to quickly just play a really short video and explain a video that we use to set out our commercial proposition to our customers. Here we go.
Global audiences expect content everywhere, instantly. But traditional localization workflows weren't built for that speed. They're complex, fragmented, and full of delays. Studios don't just need faster localization, they need control. Control over speed, control over cost, and control over how each project is delivered. Zoo's AI-enabled localization puts that control in your hands. Flexible workflows that adapt to your project. Combining AI-enabled processes with expert human input at every stage. It starts with transcription. Some projects benefit from automation. Others require expert input or fully human-led, while most sit somewhere in between. You choose the workflow that fits your content. Translation follows the same approach. AI accelerates the process where it makes sense. Expert linguists shape meaning, tone, and cultural nuance where it matters. For dubbing, that flexibility becomes even more important. Some content demands full creative performance. Other projects benefit from speed and scale. Zoo enables the right balance for each title, without losing authenticity. Oversight sits across every workflow, providing visibility, consistency, and control throughout the process. So every project is delivered with the right level of creative and technical input. The result is a localization workflow that moves at your pace. Faster turnaround, more efficient production, built around the needs of each project. Zoo Digital. Localization on your terms.
So hopefully Rob will be able to join us as well. We've let Gordon and get on with their day jobs. So we've got a few questions that are pre-submitted that we'll go through now, and then and feel free to submit questions as we're speaking. We'll cover as many as we can in the time that's available. So the first question actually to do with the demo. We're showing a demo of a real customer project. So in Eva's section. So just to clarify what we did there, the projects we work on for our customers, they're covered by non-disclosure agreements, and we can't give details and show assets that belong to those customers. So we basically substituted some of our own content in the demo just to illustrate how the process works. So that wasn't customer data, but the project that Eva described was very much a real project that we worked on for our customers, and the timeline that she spoke of and the engagement of people in different locations was all part of, it was very much the case that played out in real life. Next question is, what live projects have you actually worked on? Again, for reasons I just said, we can't actually disclose the specific details of the individual projects, but we're working on fast turnaround projects, that's fast track the really super accelerated service, as well as just delivering a much faster version of the existing services that are available in the industry. We've been doing that across a range of different clients, so it's not one or two clients now. It's several of our major customers, including major streaming companies. The kind of content that we worked on has been some sports-related content, and in fact, the case study that Eva spoke of there was a kind of sports-related type program. But we've also worked on other genres, so things like game shows and quiz shows and all manner of things really that where the customer either just wants usually that they just want a much faster turnaround that would be the norm within the industry. In terms of actual, the true fast track projects, those have been mostly in the area of sports, but with some other genres too, where we've delivered dubbing in 24 hours as Eva described, and subtitles in sort of 3-4 hours, as Gordon mentioned. Okay, the next one, maybe one for you, Rob. Tell us what orders you've already received for Fast Track, how many customers, which I've touched on a little bit already, but how much revenue? Maybe you want to sort of cover that up where we got to.
Yeah, sure. So, as I said, currently the revenue it's around 10% of our total revenue. So if you look at the revenue we've released for the year, 42 million, so it's just over 4 million is the run rate of Fast Track business. And as you said, that comes from a few customers. In terms of where that could go, I mean, when you look at our customers, we've definitely got one who's more progressed in terms of understanding how they want to use their content, how they want to use localization, so that's quite good run rate business for us at the moment. And that's coming in every month. There's definitely another couple of customers who are trialing and testing where they are, so we're getting some business from them. But I think there's quite a good opportunity to grow revenues further than that. So like I say, I think it's a great opportunity. It's very early stages, so it's hard to really get a sense across the entire customer base where it could end up. But I think even from where we are, the amount of revenue it's generating is really encouraging.
Thanks very much, Rob. Question from Simon. Does your system /AI create a learning process for you? For example, the nuances that might require a human to step in should or could update your systems once to avoid that issue appearing again. Yes, that is that is very much part of the kind of the loop back mechanism that we've built into the way in which we're deploying AI. So our use of AI, we are, as Eva showed in her demos, we're using a lot of off-the-shelf, available systems we're leveraging existing technology where it kind of makes sense. In other cases, we have done much tighter integration with certain AI type capabilities in order to adapt them so that they better suit the specific requirements we've got in our area. The next question, one for you, Rob, I think this comes from Tom. What proportion of revenue was Fast Track in 25-26 and has it scaled since March 26?
Well, yeah, I'm assuming sort of by March 26 revenue in March 25. So, as I said, it's around 10% of revenues. It's got up to a run rate of around 4 million at the moment. If I go back right to the start of the year, in March 25, it was pretty negligible. So that run rate has grown quite substantially through the year. And as I said, that's certainly one customer really getting up to speed with how it works for them and giving us that regular amount of business. So yeah, it has been. I think in the previous question when you talk about learnings, it's really been a very important year for us, and I think we've learned a huge amount during the year in terms of how to make it work for us, for our customers. And also potentially where it could go. Could we reduce speeds even more? Could we actually look at providing other solutions and other flexibility when it comes to those three key levers of price, quality and speed? So it has, I would say it has, for us in terms of the scale it is now, it has scaled very rapidly during the last financial year.
Thanks so much, Rob. So the next question I think is probably one for you as well. How material do you think Fast Track could become as a percentage of group revenue? And what does this mean for the profitability of the group?
Well, I don't think I'd like to try and guess what it could become. I think I would expect it to increase from where it is today. So from the run rate today, like I said, I think there's a lot of opportunity, a lot of conversations going on. So in terms of the absolute amount, I would expect that to go up. What that means as a percentage of our group revenues obviously depends on how the rest of the business goes. And in terms of profitability, I mean, it's a good one. If it becomes a significant part of our group, it is, as I said, margin enhancing. It's a premium service that we charge more for, so that would potentially increase overall group margins. But at the same time, just within that, some of the conversations that we're having, it's opening other doors. So it's introducing other potential revenue opportunities, particularly around dubbing, which is a lower margin business. So we could end up seeing the mix of the business changing. So again, I wouldn't like to try and give a sense that that's definitely going to increase our margins. It should grow as a revenue type. It's opening a lot of other opportunities for us in terms of the conversations we're having with customers, and that in itself we would hope improve the profitability of the group.
Thanks, Rob. The next question is about pricing. We're obviously going to be a little bit careful of commercial sensitivities around this, but maybe this is another one for you to take, Rob, if that's okay. What is the price premium on Fast Track? How much higher is the gross margin when you factor in expedited staffing requirements?
Yeah, I mean, in terms of the pricing premium, that's certainly not information we'd sort of want to make public. I mean, we discuss this with our customers, we discuss what they want. Again, the nature of what they want, the languages, the actual speed, some of the other requirements determine the price that we'd settle on. But it is obviously, as I said, margin enhancing. And in terms of the growth margin, what we're currently doing is we can manage a good amount of that within existing staffing requirements. As we said before, it's not about everybody having to work overtime and doing 24-hour days and the incremental costs of that. We move the work as the day moves, and we can move that to our different teams. So it is a premium service that attracts a premium price. Our freelancers, our translators, would expect to share in some of that, and they do. So yeah, I think that's probably as much as I can really say on that.
Yep. Thanks, Rob. Question from Andy. To what extent has fast track featured in your recent RFP conversations? Has it actually made a difference to the outcome of those RFPs? That's a good question. I think we mentioned in our statements that the nature of the RFPs that we see now is somewhat different from what we've seen in the past. A few years ago, customers weren't especially interested in any technology that you may have. If it's technology that you use internally to do your work, as far as they were concerned, they sent you assets. You process those assets, sent the results back, hopefully within the time frame, to the required quality at the agreed price, and everyone was happy. But thematically, the way in which customers are expressing what the kind of partners they want to work with going forward, and these RFPs, by the way, I should say, are almost always to do with sort of partnership frameworks, engagements they're not project specific, that they essentially determine the relationship, the commercial relationship over a period of maybe 3 years or something like that. So what we've seen in the recent ones that we've processed in the last few months has been that customers are taking a much bigger interest in technology. They want to know that the partners they're working with are innovative. Understand the tech that's out there, how that technology can benefit the service provision. They obviously expect that if technology is being used to make things more efficient, then they will be beneficiaries of those efficiencies. To what extent the fast track feature in your recent RFPs? Well, certainly we have made it clear that this is the capability we have. I think for our customers, it's a real indication and endorsement of the fact that we are a progressive, tech-enabled business, but we can offer things that many others can't. And I'm sure that has been a deciding factor in some of those decisions. Next question: how much of fast track has accelerated delivery? How much of fast track and accelerated delivery is new demand, or does it cannibalize existing demand? I think I'm going to take that. So I think that there's so to be clear, fast track is in its most extreme scenario is a new service in the industry. Being able to produce a high quality dub in 24 hours, that is unprecedented. Anything like 24 hours, is just unheard of within our industry. So where there is an opportunity for that kind of service, it is usually related to new market and industry requirements, such as these new forms of content, either the podcasts, these microdramas and all the rest of it, that require they need to get to market really quickly, and they just want to get this process. They don't want localization to stand in the way of getting that content out to their consumers. So there's definitely incremental opportunity here, and that opportunity from a market-wide standpoint is coming from those new content types. But in addition to that, there is work that's certainly coming our way that is work that would have taken place anyway, but where the customer is looking for that work to be processed and delivered in a much shorter period of time than would previously been possible. So if we can do that, and at the same competitive rates as others, then clearly that puts us in a very advantageous situation. So I don't think in that case, what we're offering there is cannibalizing something. It's actually providing competitive advantage for Zoo to win business over other vendors that aren't able to offer a service on that kind of time frame. Next question. If fast track is truly differentiated, why shouldn't we expect competitors to offer similar turnaround times within 12 months? Well, of course, as the demand for these services grows and there is more of this content, certainly we would expect our customers to be encouraging other vendors to offer these services, because obviously no buyer really wants to be beholden to a single supplier. So clearly, and there are already others who are looking to do this, but for all the feedback we've had from our customers at the moment, Zoo is the only company that's able to deliver on these timeframes at scale to these quality standards. So we certainly have a first mover advantage here, and obviously our aim is to be able to capitalise on that. Next question I'll let you cover, Rob, if that's okay, to do with resourcing Fast Track. So Fast Track is very resource intensive. How scalable is this model if it's adopted by more customers?
Yeah, that's something that we look at and keep an eye on. I think I think the first point to make is that we've got the technology in place that's up and running. We've got an extensive freelancer network in place of people ready to jump on the system. And like I said, the project I looked at has over 400 combinations of employees and freelancers all working at the same time. So that gives us a scalability that's already built in the solution. We can add more freelancers, we can get more people connected. Probably the one area that we may have to resource up, which just as the company grows, we'll have to resource this area up anyway. It's not just part of Fast Track. Is looking at the project managers, the colleagues who are really trying to sort of keep an eye on the project, watching it go from stage to stage, working with the customers to make sure everything's going well. So I think as the number of projects increase, that we probably need to look at in increasing project managers. But really the actual the main cost in terms of the freelancers, the translation work that's going on, we've already got a very scalable network and freelancer network and technology that can cope with that.
Okay, thank you. You previously said that customers value quality above all else. Are they now willing to sacrifice some of this for faster and AI-enabled speed? So we're not seeing that at the moment. That's not, I would say, a feature of the kind of projects that are coming away. Our customers have set a very high bar for quality, and they don't really want to compromise that. Obviously, they have this new content, and they have some challenges on how they can get that content to market faster. And we're clearly in a position where we can provide them solutions for that. But there are no indications that they're prepared to tolerate substandard localization, for example. So the quality bar doesn't move, or hasn't moved that we've seen so far. And I would expect that in the main to continue. I mean, I think there are sort of types of content that where the publishers have got lower quality expectations, so things like user-generated content on YouTube and elsewhere, where a publisher may be a sort of a creator working on their own, where they don't have a lot of budget, where the content is very quick and easy and inexpensive for them to produce, and where they just want to extend their reach because their income comes through a share of advertising through YouTube or other platforms. So in those settings where more eyeballs leads to more ad income, it's all incremental. Those are the areas where AI is being used almost in some cases in an unsupervised way, because it's just about getting the content out there. Even if the take-up in particular countries is not high, anything incremental is incremental income for an individual creator. So those are the places where we think where quality can be compromised, but in with the focus that we have on the kind of customers that we serve, we've not seen any indication that they're prepared to lower the bar on quality. Okay, how will you report? I'll let you do this one, Rob. How will you report on Fast Track going forward? Will it be stripped out as a separate revenue line or included under localization or media services?
At the moment, no plans to kind of formally separate it out in terms of the reporting, because it really is just part of the subtitling stream, it's part of the dubbing stream, it's part of media services. So it will encourage the growth, it will hopefully encourage the profitability within those segments, but it will always be part of them. So I don't think we formally separate it out, but just as we've done now, I think giving some sort of guidance in terms of how relevant it is and how it's progressing will will be really important.
Great. Next one, could you provide some context on the financial benefits to your customers in getting non-time sensitive content to market so much faster? So the kind of scenarios that we are, if you're a streamer and you've invested a lot of money in creating some new original content, as soon as you've got that content, you've incurred that cost. You want to start recouping that cost as quickly as you can. So you obviously want to get that on your platform available to audiences globally. So as I was saying, the work that we do is the thing that stands in the way of achieving that. It's the last step. You make the content, you do the things that we do, the media services to format everything for the platforms, and the localization to make it accessible to a wider audience. Those are things that come last, and then you get and then you can launch it on your platform, and consumers can view it, obviously. So it's, I think, in a lot of instances, it's really just about starting to recoup the investment at an earlier date. It could be in some cases there have been instances where it's clear another supplier has let a customer down, so has said they could do it by certain dates, but then they couldn't. But that content has been promised to a platform to go out on a certain date, and so there's a compressed timeline within which to do it, and that work has come to us. So there are instances of that sort. Can you think of any other examples, Rob, of
I think it's probably less to do with dubbing. There's only when customers license other people's content, they can license it for a fixed period of time at a certain cost. So being able to bring it to market quicker, being able to get it on the platform quicker, I'm imagining will maximise the amount of, or they receive their return on that investment. There's less time of it sat on the shelf waiting for it to go to be streamed. Now, it's probably more subtitling, because I think when they license content, they tend to subtitle more than dub it. But I think that's potentially not the reason why. They just might be interested in getting something out quicker. Maybe not, as we said, in the 3 hours or 24 hours, but certainly getting it out quicker than they could previously have done.
Great. Just mindful of the time, we've got a couple more minutes, so maybe it's time for another question. So I'll take this one. How much of Fast Track is dependent on Zoo's proprietary technology versus third-party tools? Okay, so certainly we do use third-party tools, and Eva showed that in the demo. If there is an off-the-shelf solution to do a certain thing, and it does it well, and we can control it in a way that enables us to make it fit seamlessly within our production workflows, then we will use it rather than, we don't find the need to reinvent wheels. So when we do invest in new software product development, it's in relation to capabilities that we don't find elsewhere, or that are so specialized and optimized for our use cases that we just need to, we just need to create something of our own that does that job. So we do use this combination of third-party tools and our own proprietary software. Our cloud-based platforms are sort of the backbone of everything we do, and the way we've designed them is such that we can easily drop in third-party tools to do certain parts of the process. And in fact, you saw that again in Eva's demo, where look at, say, for example, the automated translation using AI. That you can go in there and we've integrated a whole range of different third-party services, and you can pick the one that you think is best suited for that particular job. So we've sort of taken a sort of platform agnostic view there in terms of third-party capabilities. So we'll just use whatever's the best of breed technology. The way we're interfacing with those tools is via application programming interfaces, APIs that they expose. What that means is that we're working sort of under the hood, and have usually a much broader scope of control of the way in which that third-party software does what it does than would be afforded to just a regular user, using ChatGPT in a browser window or something like that. So So the effect of all that, it gives us competitive advantage. It means that we can integrate third-party tools where they make sense, and obviously leverage their capabilities. They're very affordable. Certainly, the costs of using them are, we can accommodate those within our the typical cost of sales that we incur. So, optimizing the workflows is what we're all about. So our processes run smoothly, run efficiently, and to that end, we will use a combination of our own stuff and third-party stuff as it makes sense. So time's just reached 15:15. In fact, I don't think that there are any more questions. I think we've managed to get through everything. So just like to wrap up by thanking everyone for attending. This recording will very soon be available, so people can watch it offline and share it with your colleagues. Just like to thank all the speakers, and also to my colleagues, Ayaz and Andy, who've been behind the scenes pulling levers to make sure this all runs smoothly. So thanks for them, and thank you again, and we'll see you next time.